our view is that the economy is set to emerge pretty strongly out of the COVID crisis. So we see a number of drivers of that. Firstly, we see the export side of the economy, which was so strong last year, very strong and much stronger than any other developed economy in 2020. And that has continued through into 2021. So we're still seeing that export side of the economy really perform and outperform any other competitor. And that's in part driven by secular demand for Irish goods. So the sectors that we're most tied into, particularly areas like food, tech, pharmaceuticals, med tech, all have this secular demand out there despite the crisis. That demand is still being driven by trends in the global economy and is helping us on the export side. But also as we start to reopen, and look, we'll get important news for many of the sectors who still are not reopened fully today, but for those sectors that are reopening and where they are reopening, we're seeing a significant pickup in consumer activity. So a very quick return to consumer activity as we start to see reopening. One of the points that we can see is that we can look at credit and debit card data, which Hazel will talk a bit more about. And we'll also have VAT data coming through, which shows really strong pickup. But Hazel will talk a bit more about that. We also see the potential for lots of volatility out there as reopening happens, not just here in Ireland, but also globally. I suppose what we're seeing at a global level is significant supply chain disruptions as as economies start to reopen, as demand across the world has picked up quicker than people have thought. We've seen a lot of pressure on people's supply chains. We've also seen significant pressure on prices and shortages of goods globally, and that's key goods, but it's also trade costs. So just as an example, which I'll show you more of in a second, we've seen some elements of trade costs go up by a factor of 500% in less than a year. So we're seeing these huge costs come through both at an international level and also this competitiveness challenge at a domestic level as we come out of COVID, with lots of expectations, particularly on the labour market side, and lots of commitments from government, which Fergal has talked about. That kind of cost pressure means that while activity is picking up, turnover is returning to the economy, and the volume of activity is definitely recovering out there. Profitability is probably going to be more challenging in the early part of this recovery in particular. How long will those last? I'll talk a little bit more about in a minute. And then what all of this means, I suppose, look, is that we're fairly bullish on recovery and bullish on the causes of recovery, I suppose, is the best way of putting it. But from a profitability point of view and in terms of the sustainability of that continued growth point of view, that there is going to need to be a new fiscal and competitiveness discipline from government as we emerge. We're seeing that in an increased mismatch across the political spectrum between promises, expectations, and what might be deliverable from growth alone, both in terms of cash on the fiscal side, but also in terms of capacity, ability, and resources on the private sector side as well. So we're facing into a lot of generational challenges coming out of COVID over the next decade. Policy is going to be dominated by challenges in infrastructure, housing, health, climate change, population aging, which is going to be rapid in the next decade to 15 years, and then competitiveness after global tax reform. And what we see is a need to focus all the resources that are available on those big generational issues. And that does mean not a return to austerity for the state, but it does mean that there will be significant prioritization of where resources go over the next decade. And that prioritization is going to be key to maintaining a competitive dynamic and a competitiveness dynamic, because any excess costs, ultimately, a lot of them will come back in business.